Do you think interest rates are going to stay the same or go down on June the 5th? That's what we're talking about today. Welcome back to Monday Morning Coffee. This is Joel. Let's get into it. First, let's talk about the history of interest rates over the past few years. If we go back to the pandemic, the bank was concerned what was going to happen with the economy, and interest rates, that is the overnight lending rate or the key interest rate, was very low, 0.25%. Today we're at 5%. How did we get there? So it's a series of things that happen. The Bank of Canada in the past few years has aggressively increased interest rates in an attempt to slow down the economy. This is because they felt like inflation was out of control. So they did this to try to slow spending, try to destroy demand when it came to the entire market. So that is why interest rates are now at 5%. So what's going to happen on June the 5th? That's what we're here to predict today. So in order to predict what's going to happen with the overnight lending rate, I looked at what the 6 national banks in Canada are predicting. Starting with Bank of Montreal, they're predicting a 25 basis point decrease in the interest rate in June. CIBC is saying the same thing. National Bank, however, is saying that interest rates will stay the same. Royal Bank, RBC, saying it will decrease. RBC is predicting a 25 point decrease. Scotiabank predicting that the rate will stay the same. TD Bank also predicting the rate will stay the same. So we have it split down the middle here. 3 of our national banks are saying it's going to decrease, and 3 of our national banks are saying it's not going to change. So that means there's a 50-50 chance that on June the 5th, the rate will decrease. So just to recap, the current rate is 5.0%, and there's a 50% chance that it will go to 4.75, and there's also a 50% chance it will stay at 5%. Either way, we won't really know until the announcement comes out on June the 5th, at which time I will be right back here to keep you up to date on what's going on. If you're in a fixed rate mortgage right now, do not worry, this will not affect you. You've signed on for a specific rate for a specific period, and so the overnight lending rate changing will not affect you. That said, if you are in a variable rate mortgage right now, this will impact that. And if rates stay the same, your rate stays the same. If the rates go down, this is a very positive thing for those of you on variable rates because that rate will decrease. So in terms of predicting what's going to happen over the next few months and by year end is kind of interesting. Listen to this. We have 4 out of the 6 banks saying that they feel the overnight lending rate will be down to 4%. That's 1 whole percentage point or 100 basis points by year end. So there's pretty strong consensus that by year end, the rate will be either 4 to 4.25. That is good news if the rate goes down 75 to 100 points by year end. So as it goes with interest rates, it takes up to 24 months for us to feel the effects of these changes in interest rates. And we are starting to feel that and see that throughout the economy. Specifically, we're starting to see the effects of interest rates on the housing market with a general market slowdown, especially in bigger markets where the average price is much higher. Again, we are being shielded from this somewhat in Atlantic Canada because our average price is the lowest in all of Canada. But in markets like Toronto, British Columbia, we are seeing sales come down quite a bit, and that is because of the cost of borrowing. So this is now starting to affect the real estate market. But it's funny how it's affecting this area in the middle and lower price points are really hot because of affordability. But even here in this area, more expensive homes aren't selling as quickly. So again, just to recap, it looks like interest rates are going to start to decrease, possibly as soon as June the 5th, and continue throughout the rest of this year. This is good news on the horizon for all of you looking to borrow money, those of you in fixed rate mortgages, and generally the real estate market. Until I see you again next week, keep being awesome.